Today we're taking a look at Mondelez. This is a viewer request video. So if you have a company you're interested in me taking a look at, go ahead and drop a comment. Let me know what companies you're interested in seeing me do a valuation on, and I might just do it. Welcome to the Stock Sale Flyer. My name is Aaron. None of this is financial advice. Let's get into it. So Mondelez, they have lots of brands. I'm sure you're familiar with a lot of them. You know, Belvita, Cliff, Chips Ahoy. We see Honey Maid. Oreo, of course, is one that they're really known for. Ritz. They own Philadelphia along with Kraft in some kind of a joint venture there. Triscuit, Toblerone, Wheat Thins. So lots of brands that a lot of us are familiar with. And as you can see, the stock's done really well in recent years. It's been a solid food stock that has seen some gradual appreciation over time. So I went in and I looked at the most recent quarterly report. As always, I highly suggest that you go through the 10K, the 10Q, and do your own research with anything like this. But I at least went through and highlighted some things that I noted that I took a look at and saw as potentially influencing the business or worth noting. So net revenue, you see there's a slight increase. Cost of sales was down year over year for the quarter. These are all for 3 months ended March 31st, year over year. Gross profit was up, so that's good. Operating income was up, so that's good. But you can see net earnings was down. And I highlighted here that they had a loss on equity method investment transactions, including impairments during this quarter 2024, which in the same quarter 2023 was actually a positive line item. So that made a pretty significant difference in the overall net earnings. Diluted earnings per share attributable to Mondelez International declined year over year for the quarter. So as you can see here, there's a good amount of goodwill and intangible assets listed on the balance sheet. You can also see the total assets that they have listed on their balance sheet for the quarter ending March 31st, 2024. So anytime I see this amount of goodwill and intangible assets on the balance sheet when compared to the total assets, I do want to go and I want to take a look at, is there the potential for write-downs on those in the future? Because if they're written down, they do have to take those as a hit on their income statement, which can impact their net earnings. Here in the 10Q, there was a note about goodwill and intangible assets. So if we scroll down, I highlighted that amortization expense for intangible assets was $38 million for the 3 months ended March 31st, 2024, and $39 million for the 3 months ended March 31st, 2023. So year over year, it was roughly the same. For the next 5 years, they did say that they currently estimate annual amortization expense of approximately $125 million in 2024 to 2026 and approximately $90 million in 2027 and 2028. So they are anticipating some write-downs in regard to amortization. At the bottom of this page, they have a note about their 2023 annual indefinite life intangible asset testing. They said they identified 13 brands that each had a fair value in excess of their book value of 10% or less. The aggregate book value of the 13 brands was $3.6 billion as of March 31st, 2024, of which $1.9 billion is related to 5 recently acquired brands. They did say they believe their current plans for each of these brands will support the current carrying values, but if plans to grow brand earnings and expand margin are not met or specific valuation factors outside of their control, like discount rates, change, then a brand or brands could become impaired in the future. So again, if I were interested in investing in this company, which I might be depending on the price, we'll get to the valuation in a bit, then I would be keeping an eye on the potential for these write-downs, because these are things that would affect their net earnings. One of the things I found interesting was they noted here that they sold the remaining part of their position in Keurig Dr. Pepper. I actually didn't know that they were invested in Keurig Dr. Pepper, but they have some notes here which you can read about how they ended up selling in 2023 the remainder of their shares in Keurig Dr. Pepper and exited their investment in the company. Another thing I found interesting was that in 2020, Mondelez invested in JDE Peet's. This says here Global Coffee and Tea Company when they IPO'd. And when you look at the investing or the investments section here again, it notes that they did issue in 2021 some exchangeable bonds. These are redeemable at maturity in September 2024 at their principal amount in cash or at our option through the delivery of an equivalent number of JDEP's ordinary shares. This is another thing. It'd be interesting to see how this investment continues to progress for them. They have engaged in a restructuring program called the Simplify to Grow program. It says the primary objective of this is to reduce their operating cost structure in both our supply chain and overhead costs. And they said since inception, we've incurred total restructuring and implementation charges of $5.3 billion related to the Simplify to Grow program. We expect to incur the remainder of the program charges by year end 2024. This is a program, it sounds like to me, to maybe drive some more efficiency in the business. As they said here, reduce our operating cost structure in both our supply chain and overhead costs. And so hopefully that will have a long-term positive effect on the business as a whole. So we'll have to stay tuned on that. They also noted that there was extreme price growth in Argentina. I guess the Argentinian peso was significantly devalued. They did an adjustment because the pricing and the currency impact in Argentina was so extreme. I'm not sure the overall effect on this emerging markets sector for that, but you can see emerging markets does make up a pretty decent amount of their revenue here. So, that is just something I wanted to point out as well. Finally, commodity trends. So this is a company that is going to be impacted by the input costs of commodities like cocoa for their chocolate, for their Oreos, wheat. They note here, sugar, nuts, other ingredient costs. Cocoa, we saw soaring in price recently and it's since come back down at least a decent amount from what I understand. But obviously, these commodity prices, and they note some other ones here, will have an impact on the business overall. So again, that is something that I wanted to note. All right, so here is my valuation for Mondelez. As you can see, revenue growth in this fiscal year and going forward, I would expect to not be as strong as it was over the past few fiscal years. They had fantastic revenue growth for 2023 fiscal year, 2022, and 2021. As a food company, I would think that would slow down some. And analysts seem to agree with me. So I have 2.43% revenue growth for this fiscal year, 4.82% revenue growth for next fiscal year. And I believe I pulled these revenue numbers from analyst estimates. I then took the average of these 2 years, the expectations for these 2 years, and I carried that average forward for the 2026, 2027, and 2028 fiscal years. Their net income margins are really solid historically. They had 13.77% last year. They had 14.97% in 2021 fiscal year, 13.37% in the 2020 fiscal year. I used 13.23% expected net income margin for this year and 13.19% expected net income margin for next year. And then I just took the average of all of these years going back to the 2020 fiscal year, and I use that for 2026, 2027, and 2028. I do think that if they do have some future write-downs, then using an average of all of these years might help protect the valuation from that a little bit, because you can see the net income margin was lower in the 2022 fiscal year. So I'm hoping that by using a little bit of a lower net income margin in 2026, 2027, and 2028 than some of these other years where it was over 13% or even almost 15% in the 2021 fiscal year, that will help protect the valuation from a potential write-down if they were to have one. So might be a little conservative, but I think that's okay. For free cash flow, again, I believe that I did analyst estimates for 2024 fiscal year, 2025 fiscal year expected on both, and they seemed, again, reasonable to me. And so I then took the average of all the years going back to the 2020 fiscal year, and I carried that average forward for 2026, 2027, and 2028. Perpetual growth rate, 2.5%. I used the diluted average shares outstanding from the 2024 quarter one earnings release. Here are the numbers I used to calculate my weighted average cost of capital, which is my required rate of return. You can see the market cap I used, the beta, the 10-year bond rate that I used, and the return of the market that I used. And I get a fair value of equity of $75.53. If after the 2028 fiscal year, if this number of shares outstanding was the number of shares outstanding, and the net income number I have here for the 2028 fiscal year became true, then your trailing 12-month PE at a PE of 15 would be $61.24. PE of 20 would be $81.65. PE of 25 would be $102.07. PE of 30 would be $122.48. Mondelez closed May 13th, 2024 at $71.76 per share. You can see my fair value of equity based on future cash flows that I've projected out would be $75.53 a share. So if I were interested in this one, I would probably want a 15 to 20% margin of safety on this. And you can see here, I added that in with a 20% margin of safety of this fair value of equity. I'd be looking at $60.42 a share. Interestingly enough, if it were to trade as high as 30 times earnings, that would allow me to double my money in 5 years if this net income assumption holds true. But even then, I'm skeptical it would trade as high as 30 times earnings. So I'm not interested in this one at these levels, but it is a company that in the future I would be fine owning if it did get to a price that I found to be more realistic for what I'd be looking for. So that's my valuation on Mondelez. If you found this helpful or interesting at all, please like, subscribe, and click the bell to get updates about future videos. Also, follow me on X at Stock Sale Flyer if you haven't done that yet. I'd love to talk to you over there as well. Drop a comment. Are there any companies that you're interested in me looking at? What do you think of this valuation? And in the description, I'm going to link a bunch of my other valuations that I've done in the past. They are time sensitive, so keep that in mind, but you might find them helpful or interesting as well. None of this is financial advice as always, but thank you for joining me again today. Take care.